Hey, what's going on, everyone? My name is Sage. We will be doing this live streaming for the first time. Hopefully, everything that I have to show you guys is going to be something that maybe it is what it is, what you're looking for. So, what we want to do with our presentation style going forward is we want to give you a better sense of what it is that we do at HighStrike, sort of our technical analysis and our base for just overall determining whether we want to be in positions or not. So, I'm going to give this roughly about 30 seconds here, and then I'll continue. All right, everyone. So, welcome to the first live stream. What I want to do with this particular presentation is I don't want to go too much in depth and be too overly technical with anything that it is that I'm going to show you. I understand that all of us have very different backgrounds, and I also understand that just trading in general, everyone has a different style. So, just as a premise, I want to just introduce who I am and what it is that I do. So, my name is Sage. I've been trading with HighStrike for 2 years now, and I've been an option seller for a lot longer than that. I've actually been an option seller for more than 10 years. Now, I started option trading based off of it's actually related in the family. I do have a family member that does trade as well, but he trades a lot larger quantity than I do. He's trading with the billions of dollars. I'm not even close to that. So I do trade my own money, and I do have several accounts that I do trade off of. However, um, I'm not an institutional based trader. I did kind of start in that sense. I did spend some time in Brazil to study under an asset manager. I figured that that wasn't necessarily what I wanted to do for long term. So when I came back to the States, I decided that I wanted to pursue my own business, but I also did trade on the side. So this is more than 10 years ago, and I've just fallen in love with just trading in general, right? So that's some of my base. I do trade with a little bit of a larger account. Some of you are very aware of my overall trading style, but what particularly that I do is I sell options. So for selling options, it's a lot different than buying options. So if I'll give you a scenario when we're looking to buy or call or put, which are going to be the most basic option strategies that you can have in the market, when you purchase a call, you want the underlying to go up. Now, when you purchase a put, you want the underlying to go down. So if I were to buy, a 470 put on SPY and it's going to expire next week, we want SPY to be above 470, hopefully as much as possible, so that contract can appreciate in value and then have that explosiveness in the actual contract. Now, if I am purchasing a put, that put option, what we want to happen is we want the underlying asset to sink. So let's say I purchase a 450 put on SPY. Obviously, I would love to see SPY sink down to 450 as quickly as humanly possible. So that's how the put and call thing sort of works. A lot of you already know this. This is trading 101. Now, what it is that I do is I actually sell these contracts. So not to confuse you, but whenever we're purchasing a call, we want something to go up in value as explosively as possible. So when I sell a call, I actually want the underlying to go down. So this is a little bit trippy, especially for newer people. But if I do sell something, then I want the underlying asset, especially if it's a call, I want the underlying asset to move lower. And if I sell a put, then that's going to be a bullish assumption. So that bullish assumption when I sell a put is always going to be exactly the same sort of opinion that I would have if I were to purchase a call. So there are more than one ways to go along the market. Traditionally, we purchase stocks, and then of course you want that stock to appreciate in value. Same thing with a call and put. It's very simple for us to understand. Now, when we're talking about selling puts and then selling calls, it sometimes can get a little hairy. Now, I just want to include this here for anyone rewatching this recording, or if you don't really have a strong base of what options just in general is, I just want to make this abundantly clear. I don't sell naked options. It doesn't happen. So a naked option, what that is I sell just a straight up call or I sell just a straight up put. And I'm going to actually show you in my broker why it is that I don't like to do that. So I'm going to show you, um, I'm going to show you here on my screen. Let me remove this from full screen and then we can get into this. So you guys are seeing my screen. I'm going to show you the broker that I use. I use something called Tastyworks. I use this because for me, when I'm taking my larger positions, when I'm taking fairly decent amount of contracts, this really helps me out for cost and commission. So they're capped. So it's a little bit different than Toss. Also a little bit different than Robinhood, or if you guys are using any other platform, IBKR, we do have cap commissions on this, which is why I really, really like Tasty Trade. But anyway, if I'm going to sell a naked position, let's say I want to do this on SPY, which everyone is very familiar with SPY. If I were to sell a naked option, just for example, if I do a 460, I'm selling a put in this case, right? Let's just look at the collateral, right? Because when you purchase a put, it's very simple for you to understand the risk and reward on the position. So if I were to purchase this put is going to cost me $423, okay? So this is the max loss that I can incur on the position. That's all fine. Now, when you're selling a put, this is the thing that trips people up, right? And it kind of trips me up too, even now after doing this for a little while. If I'm selling a 460 put, the max potential loss that I can incur on this trade is $45,000. Now, I can only get to that number only if SPY were to go to zero. Is that going to happen? More than likely, it's not going to happen. But you can still incur a pretty severe loss if we were to trade below the 460 strike sometime in the next 38 days. So in this sense, what I'm not doing is I'm not selling naked options. And the same thing is true for the call side, guys. So the call side is going to put us here. If we want to sell a call, if you're looking at your risk reward profile, which is something we do not very often, we do on every single trade. I'm looking at a max potential profit of $400 for a max potential loss of infinity. Why does that say infinity, right? It says infinity because theoretically SPY can go to an infinite value. Now, is it going to go to infinity and beyond? Probably not, right? It's probably not going to happen. But we just want to make sure that we understand the risk reward profile on every trade that we take. So in essence, right, anyone watching this recording or anyone watching this after the fact, number one thing that you need to understand, risk reward is everything in trading. It should be, if you're a business-minded person, or if you're not, if you're a teenager, or if you're just getting into this, or you have nothing at all that you understand about the world, and you're just getting into trying to make money, you need to understand risk reward. So in this sense, when we're selling naked options, the risk reward is actually quite bad. It's actually really, really bad. So instead of doing a naked option where you're selling a naked call or a naked put, what we want to do is we want to add an additional element to this. And I'm going to show you how this works in just a second, and then we'll talk about some chart patterns because I don't want to bore you guys with some of the minutia of these details, right? Because this is not class in session. I want to give you guys more insight into some of the things that I would see in the broad-based market, especially as we're hitting new 52-week highs on some of the indexes. So what I want to do to add an additional layer of overall protection is I'm going to purchase either a call or put just so we can define the risk here. And these are what's called define risk trades. So for me to define the risk here, I'm just going to add an additional element, and I'm going to explain the numbers for you, right? So just anyone that never has done this before, I'm going to break this down pretty cleanly so you have a very, very good understanding. So the first position that I had was just a naked call. This naked call, I'm looking to take in $400. Cool. But the theoretical max loss is infinite, right? And this is also another thing that you need to consider. The buying power that we're using in order for us to try to make $400 is $8,600. That's terrible risk reward. So a lot of times you hear people saying that they're wheeling a strategy or they're selling calls against their long positions in the market. This is often what they're doing. So they're putting up a crap ton of money to not make too much money on the back end. So I think something that would be a little bit more effective, we're not going to make as much money here, but I'm going to show you how you can up the ante and how you can just take a couple more contracts in order for you to get to the 400 mark, just in case you want to get there. But we're going to add the protective element here. So now instead of me using $8,600 of my buying power in, let's just say theoretically my $10,000 account, I'm going to use $60. Now instead of making $400, now I'm looking to take a max profit of $40 in. Now, if I do want to get back to that point where I might be risking to get to a $400 potential max income for the trade, what I want to do is I just want to take more contracts. So instead of doing 1, I'll do 10. So let's check out some of the numbers here. The overall max loss is no longer $8,600. Now the overall max loss is $8,600. Now it's down to $600, excuse me. So the overall leveraging of this position is already sort of favorable. Now, if you calculate risk reward, it's very simple for you to do. Max profit versus what you can potentially max lose here. So 4 over 6 or 400 over 600, you're going to get some sort of percentage value. I normally like to be above 50%, and just looking at this real quick, we are indeed above the 50% mark on our ROI. If we go a little bit closer to at the money, or even in the money. We won't go too much in depth with this, but if we go a little bit closer, this is for option traders or sellers perceived as additional risk, but you are paid for this additional risk. So you're putting up a max loss that is less than it was before, but you're also getting paid for the amount of risk that you're taking. So if you have a directional bias and you happen to be correct in your bias, you can end up making money here. So this is a whole other different ball game. We're not going to get into this today. We can do this for a different session, but all in all, what it is that I want to convey to you guys as cleanly and as clearly as humanly possible is we do not take naked trades at all. So we're not going to do something like this. This is never going to happen. This is no signal that I've ever given. And we're never going to do something like this. This is never going to happen. What we want to do is we want to add the protective element where we're adding the undefined, we're removing the undefined risk out of the trade. So you know exactly how much you stand to lose or how much you stand to gain, which I think is more for our mental sanity, if anything else. Now, if you're someone that's trading with $1 million, do I recommend selling naked options? I actually don't recommend that at all. For someone that is, playing with $1 million, $500,000, $200,000, $100,000, believe me, we have a lot of those players in the group. For those guys that are trading those amounts, instead of doing, let's say, 500 contracts of something like this, or let's just say 100 contracts, right? Instead of taking a trade like this, even this is pretty small. What we want to do is we just want to widen the width of the strikes. So this way we can start playing a little bit better with some of the numbers and percentage values that we have for our overall account. That is for another day. That is for, larger account sizes, so we don't need to get too much into it. So, all right, we went over very quickly just overall how we look at some of the option strategies that I use. I didn't really give you guys a name, but these are called put credit spreads and call credit spreads. So I just want to revisit, and then we'll jump into the chart. We'll do some analysis. Just want to make sure that this is abundantly clear. When you're buying a call, buying a put, those are debit transactions, right? So a debit transaction means that it's going to cost you something. So whenever I'm looking to purchase a call or put in either scenario, it's going to give me a defined value that I need to put up. And then, of course, I want to sell that call or put position for more money than what it is that I paid. Simple, very, very simple. So if I buy this call right here, let's say the 470 call, I want the $397 that I'm paying for this. I want to sell it at $600, $1,200, whatever it is, and then I keep the difference. That is very simple to understand. Now, if I were to do this, let's say at a 460 put, same concept, right? I'm putting up $422, and I want to sell this for theoretically $1,000, right? Where I'm making more than 100% on this trade. So we got that. We understand that. The thing that you need to make abundantly clear is when you're looking to sell a call, you don't want the underlying asset to go up. You want it to lose value, all right? And then when you're selling a put or a put credit spread in this scenario, because that's all that I do, when you're selling a put credit spread, then you want the underlying to start moving up. So don't get that confused, right? We use a very nice little diagram for newer traders to really, really understand that because it can get a little fishy. All right, so we got that out of the way. Let's cover just a couple of analysis of things that I saw today that were quite interesting. I'm going to share with you guys a few trades that I'm in. Maybe I'll do maybe 2 or 3 of them, and then we'll do analysis on some of the mega cap stuff, and then we'll talk about SPY, Qs. We'll talk about IWM a little bit, and then I'll open up. It's okay if there's not too many people for this live session, and if there's no questions at the end, that's perfectly fine. I wasn't necessarily anticipating a very, very large crowd today. But if anyone that is on has any questions, I would be more than glad to answer them, okay? So let's go over just a couple trades that I'm in right now. I'm going to mention 3 of them. The first trade that I'm in that I signaled just a couple days ago is Dell. So why did I want to take a long position on Dell? Well, last earnings that we had for Dell, they crushed it. They absolutely crushed it. So we had one of my signals that is not doing very well. So Dell is one that is doing well, but I want to be fair. I took a position on Oracle where I thought it was going to trade upwards, right? I thought we were going to break above 115, and then it sold off today by 12%. So in this position, I'm down per the one contract. I'm down about $250. So I like to, whenever I'm putting on a position, I always like to put on a counterbalancing position. So this is a little bit more advanced, but if I'm going long on something, I want to try to look to go short on something else, or I want to try to put opposing position trades just so I can balance the overall delta on my portfolio. If that went over your head, don't worry about it right now. All you need to understand to make it as simple as humanly possible is if I'm putting on a trade, I just want to put on an opposing trade. So if I lose on my initial trade, at least I can make a little bit money on the second opposing trade that I'm putting on. So it's kind of like going long for SPY next week, but shorting SPY for next month, if that makes sense. All right, so the Oracle position, ate crap on, literally. Now, the Dell position is one position that I am right now doing sort of okay on. So a couple things that we want to know, right? Few things that I usually introduce to our newer traders, some of our alpha members, or just general traders in general in the Discord group. I always talk about where we can see accumulation imbalance and when we start seeing a shift or turn via price action psychology. So what exactly is price action psychology? It's sort of a simple term, but there's a lot of complexities to this. It's basically going to tell you what exactly the buyers or the sellers are thinking at a specific point. And it's very easy to see that if you're using candlestick charts, if you're using footprint charts, the information is here. So wherever you see a very strong pivot move in direction, and especially if there's a little bit of volume behind that, is usually a place where you want to start paying attention to. So I signaled a long position on Dell about I think it was 2 or 3 days ago. So I started seeing that we were getting some of that turn right around here. Now, one term or one thing that I normally recommend you guys look for is something called either bullish or bearish engulfing. So did I see very strong bullish engulfing here? Not necessarily, but I did think that running up into earnings that they're going to have here in roughly about 38 days, I thought it would be a pretty good candidate for us to see a decent run up just because their last quarters was fairly strong. So I have this opinion on a couple stocks, and I will mention a few of them after I get through Dell. So as I'm looking at Dell, I'm seeing some of the pivot that we have here. A couple things that I don't like about taking a long position on Dell is I don't like where we are on the moving averages. So the moving averages that I use most for confirmation is going to be my 9 and my 21. So the 9 and the 21 moving average, depending on how you trade on or how you scalp or how you look at technical analysis, for me, I like to see momentum not so much on the 1 minute or the 5 minute. I would prefer to see it on a day-to-day to week-to-week basis. So that's normally going to mean that I'm living anywhere between the 1 hour to roughly about the daily chart. So 1, 2, 4, and daily. So as I'm starting to pull into some of the shorter time frames on Dell, I'm starting to see that there is a base that's created. Now, we were just talking about the moving averages, right? I didn't see the moving average starting to cross on the larger time frame, not on the daily, but I did start to see it a little bit, a very tiny little bit on the 2 hour and the 1 hour time frame. So I'm going to prove that to you guys now. So this is the 2 hour. There's the 9 and the 21 moving average cross that's right there. And then we're going to look at the 1 hour. I actually did a lesson in alpha about this this morning. So what I said in the alpha program is the same thing that I'm going to say to you guys. Whenever you're looking to take a entry or maybe even exit a trade, but specifically for entries, you want to try to always meet the same condition that you've had prior, right? This is all about you taking a trade based off of a strategy rather than opinion. You don't want to be taking trades on your opinion. I think SPY is going to trade up today. Okay. I think SPY is going to sell off today. Okay. That's not really a basis of any confirmation, in my opinion. If you want to do this and you want to do this professionally and you want to do this with some sort of form of structure, then what you need to do is you need to look for your own confirmations. And I'm more than glad to share mine. So that 9 and the 21 cross is what it is that I saw. And then I use something called a volume profile. So my volume profile is going to stipulate to me exactly where the amount of interest was if I'm anchoring at a specific point. So that's just technical jargon just to say my anchoring point is right here. So depending on where I move my anchoring point, my volume profile is going to change. Do you guys see that? And they're going to correspond to the right colors. All right, so normally when I'm looking to anchor my either VWAP or anchor just my volume profile, I'm looking for the lowest point that happened the most recent. So for me, that's going to put us right around here. So what is this telling me when I took my trade? This is kind of telling me that we had support right around this $67 area. That's exactly what it is it's telling me. And then we also have something called a point of control. I'm not usually using the point of control always to make a determination on taking a trade. Doesn't normally happen, but it is, I would say, just like a guiding point, right? I'm not going to take a trade because it hit the point of control and then it bounced off that level. It's not going to happen that way. But what will happen is I'm going to leave it on the chart, set an alert, and if we're trading into that point of control, which is the largest amount of accumulation per a specific price point, depending on where you weighted it, then it's some information that I maybe want to base a decision off of. So all that fancy talk is just to say that if I'm anchoring my points at some low point, we can even go a little bit lower. It doesn't have to exactly be there, right? If you're using the daily time frame, you want to go all the way back here, that's fine. It's additional information that you have. So of course we have support. I mean, I don't even need to look at the volume profile. Of course we have support at $55. Now, are we trading down to 55? I don't necessarily think so. I don't necessarily think so. So this is why I took my long position on Dell. So this currently is a position right now that I'm doing okay on. Is it a winner? No, it's not a winner quite yet, but we're going to see how this goes. Now, I personally am looking for this to trade right around the $72 area. And if we can get above 72, then I'm looking for this to trade right around that $74 area. So that's just one trade that we recently have. All right, I'm going to talk about a few other ones. I'm going to share with some of you some recent trades that I've had. RH is another one. This is something that I signaled just recently, right? I'm going to share with you some of the things that I like about this trade and some of the things that I don't, and then we'll talk about the indexes, and I promise I won't hold you guys for too long because I can sit here for hours and hours and hours and talk about this stuff. This is my life, guys. All right, so if I'm looking at RH, we had a catalyst that plummeted this stock, right? If anyone knows a little bit about this stock, their premiums are fairly great for someone that does what it is that I do. The implied volatility is nice and rich. If you don't know what that means, implied volatility is everything to an option seller, absolutely everything. So it's something that maybe after this presentation, or if you don't have too much of a good sense or technical command of what implied volatility is, I would highly recommend watching just a couple of videos just so you guys understand, because it is the lifeblood of what an option seller does. So that all that aside, if we're looking at some of the, I would say, potential points of interest, the first one is going to be the support that we have down at 230. Okay. So I signaled what's called a put credit spread, which has a long biased opinion with a short strike at 250. Awesome. So my points of contact, or at least my points of interest, are going to put me where we've recently saw price action touch and then bounce off from, right? Just to keep it fairly simple to understand. So those points are 230, right? So we have this point of accumulation, or we can consider that we've held a support or a base here. We kind of held that support after this flag printed, but ultimately the strongest base is around the $215 area. So we sold off quite hard. I don't love the volume that propelled us lower here. That is a crap ton of volume. I was about to curse, but there's a crap ton of volume. So another thing that I kind of don't like is, as we're looking at some of our very old laggy indicators, our RSI and our MACD, we're not at the low point on RH quite yet. If we pull back on the weekly time frame, this is going to be even truer, right? We're pretty much at the zero line right on the histogram there for the MACD. And on the RSI, we're pretty much almost, I would say, close to that 50% mark. So all in all, I think we're at a fairly decent point to either consider, are we going to hold the space or are we going to start trading upwards? I'm betting on upwards right now. So an additional level that I teach very often is I'm normally looking for some of the orders that come in via order option flow. So I'm not going to get too much into this. This is something that I've been using for years and years and years, and I do use it quite extensively. So if I'm starting to see long orders that are accumulating for something, Microsoft, Nvidia, R8, whatever it is, I'm usually looking for a time frame for us to start recovering into. So if I start to see that there is a large amount of accumulation for a specific time period, that's normally the trade that I want to chase. So before I look at Nvidia, I'll just give you an example. Actually, you know what? Let's use Microsoft, and then we'll jump back into RH. Before I look at positions on Microsoft, and I've been dying to get long Microsoft, I cannot tell you how long, for a very long time. I've just never got my entry. If I'm seeing that a lot of long orders are coming in for a specific stock and we're low enough, closer to a very decent demand level, I'm going long 9 times out of 10. Now, I'm a little bit skittish on taking long positions the closer we are at 52-week highs. That's just the kind of trader that I am. I've been bitten many times before. But as far as I can see, just visually, there's another way that I use to confirm some of the long orders that are coming in. But just visually, there's a lot of orders coming in long on Microsoft. That's not surprising. And there's a crap ton of long orders coming in on Nvidia. There were a little bit more. It's alleviated, but there's still a lot of long orders here. Quite a bit, right? All right, so there's that. Now, if we get back to RH, I did see some long orders that did come in. So all in all, I decided that I wanted to look to see if I can try my bout here for a long order so I can target all the way up to about 275, 280. So those are just 2 positions that I've recently taken, okay? So I just wanted you guys to get a little bit of a sense of how it is that I think through my trades. Now let's actually talk about some of the levels that we have here on the indexes, and then I promise that will be it for today. I won't bore you guys for too long, promise. So now let's look at SPY, and then let's look at QQQ. SPY, as what I've done for technical analysis, I would say for the last 3 weeks, my target area for SPY for 3, maybe even 4 weeks, pretty much all of November, was that $460 level. Now, am I long SPY right now? Indirectly, I am. I'm actually long something called TNA. So TNA is going to be a 3 times leveraged ETF. This trade is already done with, so I'm comfortable with sharing this with you guys. I'm up several thousands of dollars on this trade. So I saw that it consolidated here. I saw my cross on my 9 and my 21. And then as soon as I started seeing that SPY was doing its thing, I opted to take TNA, right? So I took TNA via put credit spread, and I took quite a few shares on this as well. So I took it approximately at this $27.80 level, $28 level. And right now, our position is roughly about 60% up. So I signaled 2 trades on this. And then I did mention very, very clearly that I went heavy on this trade. I went very heavy. Now, does that mean that this trade is going to be a winner? Not necessarily. But I do like some of the conditions that were being set, right? So some of the conditions where we had elevated volume that was coming in on some of the larger time frames being the weekly. So I see my little pocket there. We got close enough. We got close enough to a bottom. My bottom was 19. It hit 21 and started taking off just like the rest of the freaking market. And it just hasn't pulled back. At least SPY or QQQ hasn't. But TNA still has some room to the upside. So TNA is one of my favorite stocks just to trade in general. So I'm looking for this to start trading into about the $35, $37 pocket. That's going to be exceptional for our put credit spreads. Now, our shares would be a little bit more interesting if we can get up to about $50, I would say. So that, if we took it at 28, we're getting close to doubling our money at this point. So that's why I wanted to take TNA as opposed to SPY. So right now, it's working perfectly. So what does that have to do with SPY? Right now, it's telling me that we have a little bit of a strong pendulum that is swinging to the upside because SPY has not given up any ground whatsoever in 6 weeks. I don't know if anyone has noticed this, right? So CPI came in today. We have FOMC tomorrow. All this is a catalyst for furthering the ground line here. So it looks like we're just pushing that marker and pushing and pushing and pushing. So in my opinion, said this for about 3 to 4 weeks. 262 and then 265, right? So we're basically at 265 now. Ultimately, I have somewhat of an exhaustion zone closer to 470. So 470 is going to put us right there. Now, am I looking at signs of exhaustion at this point? You bet your ass. Yeah, for sure. So, excuse me. I'm waiting for SPY to pull back a little bit, but I haven't seen signs of that quite yet. There's no weakness at the top at all. Oh, excuse me. I'm so sorry, guys. So there's no weakness at the top here at all. So for me, we still start seeing some continuation. If FOMC does well tomorrow, if some of the commentary and some of this really, really dovishness and bullishness commentary that we have, where we're going to be cutting interest rate hikes as early as February or going into March, then SPY is just ready for another leg up, right? And we've also caught this via the bond market. Anyone knows me knows I've been talking about the bond market for basically 6 months. We did catch the bond market down here. We got an entry at the bond market all the way up here, but also I did add to this point right here. So anything that is interest rate sensitive has been recovering quite well. And inevitably, the tech sector stocks, QQQ, they've all been doing quite well because of that anticipation of us pulling back with those interest rates. So that is just one of the very many reasons why we're pulling up. Also, the AI boom and how well Microsoft has been doing. Their earnings reports have been quite strong. I actually thought that it was unusual that Oracle didn't do as well, but that's for another story. But for right now, the hard hitters, they are trimming some of the fat. We saw it with Spotify. We saw it with Meta a couple months back. We've seen it a little bit with some of the other big tech companies. We saw it quite a bit with Netflix. They're doing what it is that they need to do to save money, and they're also putting numbers on the board. So all these reasons are really propelling the market to where it is right now. So let's get back to SPY and let's get back to QQQ. Let's not talk about the bond market because I know no one cares about it but me. All right, so anyway, 470 is where I'm seeing us trade into, and then we'll look to see if we can get some exhaustion at this point, and then there I'm interested in putting on a call credit spread as opposed to just taking straight puts. In my opinion, since we are as low as we are on the VIX, VIX is the volatility index, right? So it's the CBOE volatility index. If you don't know what that is, you need to know how volatility relates to what overall is happening for the consensus in the market. So CBOE volatility index is going to tell you how much volatility or how expensive some of the contracts are on SPX. And then of course, that's going to trickle down to SPY. So that inverse, not that inverse, but that relationship is something that you need to understand quite well. But right now, the VIX is trading very, very low. So this tells me that as an option seller, I probably don't want to be selling too many options on SPY right now because the implied volatility rich premium is just not there. It's just not there. All right, so I shared with you guys a couple levels. I know I give you a lot of additional information. I just want to cover my basis here. I'm going to go over QQQ a little bit quicker in terms of analysis, and then we'll do IWM, and then that'll be it for today. So we punched our hole above 390, right? I mean, we sucker punched this bad boy. So we got the cross on the 4-hour. Now, did I see this trade? I did not. I actually was looking for us to start rounding the corner and then start trading down to about, this is what I was saying for the last about 2 weeks, down to about 370. Now, I did mention that I wanted to take long a lot of stocks, including QQQ. Now, I will be completely transparent here. I do have 2 short positions that are losing on QQQ. However, I have about 9 positions that are long in tech just in general. So the 2 losing positions that I have on the Qs, what it is that I was talking about, just a couple minutes ago, maybe about 15 minutes ago, I like to counterbalance my trades as much as humanly possible. I don't like to only be in longs. I don't like to only be in shorts. I like to be fairly well-rounded. So the 2 short positions that I'm losing on for my Qs doesn't necessarily mean that I'm not making money. I'm not making money in these 2 trades, but I am making money on the back end of some of the other 9 to 11 trades that I do have long. And there's quite a few of them. I'm not going to mention all of them because there's too many. But anyway, now let's actually talk about some levels. So for me, it's kind of unusual that we broke above 395. We're looking to test this $400 level. We're there. We're there. We're not looking to test it. We're basically there. So if we give this even more context, our supply level is going to put us at about 404. So that's the high. That's the high there for the Qs. Now, what I've been seeing, and I'll bite my tongue if I'm wrong here, is I've been seeing some short orders coming in on tech, and they're rounding the corner for about January to February's expiration. So you guys can see quite a bit of them here. Now, what it is that I'm specifically going to look for before I start layering in additional short positions on the Qs, because right now I'm not short the market. I'm actually pretty long the market in general for my entire portfolio and for the portfolio and the guys in the trading group. So for the Qs, I'm going to see if we can punch another hole above 404, right? So we need another $4 move here, and we're basically there. If we can punch that hole and then see some continuation, if you use something called Fibonacci sequences, the Fibonacci's are telling me that we might have some exhaustion a little bit closer to about 410 to 414, okay? So that would be a $10 move to the upside. I don't want to go over Fibonacci's here because it's just way too much information and way too much for me to just bombard you guys with. I don't want to do that right now. But about the $404 level is where I have a keen eye on. But more specifically, what we want to look for is something called price action psychology. So as we're getting to these levels, if we start noticing that it's really losing steam up here, which it's not, it doesn't look like it is. But if we're losing some steam and we're getting some very, very clear rejections on the daily and the 4-hour time frame, then I want to layer in an additional call credit spread or just a short position. So just to reiterate, I don't have targets to the downside on the Qs. My target was 370, and that was blown to hell, literally blown to hell. We were starting to round some of the corner here, and then I got faked out, literally faked out. So on the 2-hour time frame, we were starting to get that cross on my 9 and my 21. It's not always going to work, but we're starting to get the cross. And then as you guys can see, I have some of my zones here. Let me remove this. I have some of my zones here that I was targeting for my short positions. And then all of a sudden, boom, we just blew this out of the water. So right now, all we have to do is just be patient. So as soon as I start seeing more concrete evidence that we're looking for weakness, again, I will layer in my short positions because this is not going to go up forever. We know that. We know that we have ebbs and flows in the market. So my target, again, is going to be roughly around that $402, $404 level. And then if we can get to about 410, that's where I'm starting to look for new additional short positions. Now, I do want to talk about IWM, and then I promise you guys that'll be it for this live session. And we will be doing a lot more of these, okay? I want to really, really start building an audience base so you guys really get a sense of how it is that I think about things, not necessarily giving you the trades and spoon feeding you them. That's not what we like to do. We actually like to teach you how to look for your own trades. So if you bring a trade idea to me, if it's something that makes sense and it has context to it, then by all means, then what we want to do is we want to start layering in small positions and then start building our confidence. That's ultimately what we want here. But anyway, with IWM, I was a total dummy for thinking that the $162 level was not going to hold as a level of support. I've been telling my guys that down at 155 was where 157, I'm sorry. So 157 was where I was planning a very, very strong plan of attack. So I was off here by $5. I was off by $5 of missing this gorgeous move to the upside. So I was very stringent. I was very picky on my entry, and I didn't necessarily believe the turn that we were getting when we were right at 162. And all in all, just looking at it, I don't really see very strong confirmations aside from the volume that came in here, but it has drifted to the upside. So what I'm looking for IWM, I am indirectly long IWM. I'm long IWM, something called DPST, if anyone has ever heard of this. This is a 3 times leveraged ETF. We were trading at 82 this morning, and then we pulled back a little bit. My entry on this for some people was $45, and then my actual entry was $60. So I'm up on this quite nicely. But anyway, indirectly playing IWM. If I want to take a long position, I'm sort of skittish of taking a long position here at this top at 187. I don't like doing that, okay? I don't like taking a trade after I get a cross on the moving averages. It just doesn't make me feel comfortable. I would prefer to wait if we start getting a pullback and then start trading into some of the volume profile. So one of my pit stops is going to be 178, and then below that, I have right around 170, I would say 173 to about 175. So if we can get down that low, which it doesn't really seem like we will, but if we can, if it meets my condition, I'm looking to take my long, right? So IWM, in my opinion, it does look like it breaks above this $187 level, and then we should be targeting closer to about 191, 192. So that's what it is that I'm seeing. Now, I will tell you that I am interested in putting on a short position on IWM, depending on if and when we can reject closer to about 195 all the way up to about 198. I'm still leaning pretty long on IWM, though. So I've been long a couple banks, a couple regional banks. Those positions are still on for us. But for IWM, I want to be a little bit more cautious, and I want to wait to see if we can pull back a little bit before I look to take my long positions. I'm normally not looking to clip tops. I'm going to show you exactly what I mean by this. A snow position. So I'll talk about snow. If I were to take a position on snow, which I'm actually in snow right now. I took a long position on snow when we were roughly about 175. So I was already late to this position, but I don't like to clip tops. So what I mean by this is if we're looking at the weekly time frame, I normally am not looking to take this breakout trade right here. I'm looking to get in a little bit earlier, right? So that's where I feel comfortable. So on the weekly time frame, if we're just using moving averages as my confirmation, I would have more than likely taken this at about 162, 165. I was $10 late to this, so I took this at 174, 175. We're trading at 193. If I look into my broker, we should be up about 70% on this trade. So I like to be just a hair early, just a little, if I can be, right? And I'm using my confirmations for my moving averages. Now, what I don't like to do, which I did on one trade, I will admit that I did this on one trade, but what I don't like to do is I don't like to take a top position trade like this and then see if it can follow through. Not usually my style. I'll give you another example of coin before I show you the trade that I did this on. I'm not normally looking to take a long position on coin following a breakthrough here. I would have preferred to take my long position, in all honesty, when we were starting to break above here. I don't have a positive opinion on coin whatsoever, especially after the Binance stuff, but I will be honest, coin was all calls for a hot minute. It seems like it pulled off a little bit. So coin had its move. It moved since its bottom all the way here at $53. It's moved more than 150%. So this was one hell of a move that I just missed, and I'm okay with that. But the trade where I did snip the top is going to be Snapchat. Snapchat. Are we trading Snapchat? Yeah, we are. So the Snapchat trade was a little bit difficult, a little bit of a difficult pill for me to swallow. But I took this trade when we were looking to break this top right here. So right at about $14. We are up on this trade. I'm long for this for January. The reason why I took this long is we need to give this some context. So we were, in my opinion, on the daily and weekly, we were consolidating for as long as I would say August of 2022. So you guys see that? That is a very, very long period of consolidation. So I'm just looking for additional follow through on this trade. And since the market has been pivoting upwards, Snapchat going along with Meta as well, and some of the like-minded companies, I was starting to see a little bit of follow through on Snapchat. Could I have gotten in a little bit earlier? Honestly, honest to God, I could have. I could have gotten in when we started crossing right here on that 9 and the 21 using the daily time frame, but realistically I would have probably looked to get in about $11, which I did mention in the group, and I was sort of sour that I didn't catch this before because I didn't set my alert. But all in all, there it is. We went over some of the indexes that I wanted to go over: SPY, QQQ, IWM. And we went over just a little bit of just trading, trading 101, a couple terminologies, and just a couple trades that I'm in currently right now. That's all I really wanted to go over. This went over a little bit longer than what I anticipated. I don't want to make these too long, but before I jump off, does anyone have any additional questions? I'm going to look at the chat channel right now. Yeah, so how long the expiration for an options to be picked? Normally, I'm anywhere between 15 to about 45 days for my style. So if I'm picking a position, it's normally going to be based first off of price action, and then I'm using about the 15 to 45 day mark. How do I use all the indicators? There's not too many indicators here. Realistically, I'm only using the 9 and the 21. And these right here, I mean, these are just for show. This is not really something that I'm using. I use more price action than anything else. What strikes need to be picked? This is not too much the scope of this video, but the way that I normally pick my strikes is I'm going close to at the money or very, very slightly out of the money. That's usually how I pick my strikes. So that's for selling as opposed to buying. Does anyone have any? Yeah, that's what I'm. You know what? I'll actually show you in my broker. I don't mind doing that. All right, so I'm going to show you in all 4 scenarios. If I'm taking a call or a put position, the calls and put positions, I do 3 to like 7 DT. So if I do SPY, if I'm going to do a short or a long position, I'm doing maybe 1 to 2 points out of the money. You will never see me do something like this. I'm not taking something that is ridiculously out of the money where we need a very strong move. I actually rather pay a little bit more premium just so I can have a higher probabilistic trade. So generally I'm going between 1 to 3 points out of the money, and the same thing is for the call. So I would very realistically take something like this. This is, I would do this all day long. Now, it's funny that this lines up exactly with at least how I set up my positions for call credit spreads and put credit spreads. I don't go far out of the money like this because the risk reward is terrible. What I usually do is if I have a strong bias on a position, this is not going to make sense to a lot of you, especially if you're watching the pre-recording, but I very often go in the money just because the risk reward makes more sense. I know some of you would say that this is crazy for me to do. Why would I do something like this when the probability of profit is higher if I do something like this? That's okay to think like that. It's perfectly fine. Now, my question to you, I'll just include this again for the pre-recording, anyone that watches this, is if I lose max loss on this trade, I lose $75. How many trades do I need to win next for me to make my $75 back if I'm taking this exact trade? I need to win at least 3.5 trades, right? I need to win 3.5 trades at 100% max profit. So how likely do you win 3 trades in a row? I mean, it happens, but it's not always, likely. I think in probabilities. So the way that I would go about this is even though I'm losing on a trade, and I lose on trades all the time, but if I'm losing on a trade, if I were to take something like this, if I lose on this trade, $48, $50, how many trades do I need to win in order for me to make my $50 back? Instead of 3, I only need to win my next trade in order for me to make that money back. So if I win 2 trades in a row, I'm already ahead of the game. So that's how I think in terms of probability. This is very, very simple. I outline this so cleanly in the alpha program and also in the Discord. But anyway, for me, risk reward is more a matter of if you understand the overall totality of trades that you're taking, not a single trade. I don't think about just the single trade. I think about my entire portfolio and how they all function in unison with one another, very similarly to how a company is run. So if you're having a bad employee or you need to fire someone, you get rid of that trade, that employee, and then you try to replace it with someone new. And if that doesn't work out, go on and on and on. So I'm not only putting on longs, I'm not only putting on shorts. There's usually a pretty healthy mix. So when I go back to thinking about probability, some of you guys talk about not ROI, but RR all the time, which is risk reward. If you want to think about risk reward, I take these trades day in and day out. I do an SPX trade and I do something. To you guys, it's going to seem strange, but to me, it's not strange at all. If I do a 7 DTE trade and I do something like a call credit spread on SPX, risk reward here is okay. Now, if I have a strong opinion that we're going to be trading lower, I'm going to do something like this. I'll do a 610, 646, 15. Sage, you're going to be exercise on this. You can't be exercise on SPX. So we're already eliminating that. They're European style options. Cool. So I'm putting up $130. That's how much I can stand to lose. But if I'm right on this direction and if we're following through, I make $370. So if I were to take, now let's actually talk about actual trades that I take. If I were to take 25 contracts on this, I'm putting up $3,000 to potentially make $9,500. Am I going to take a trade like this? 9 times out of 10, I probably am if I have a bias on it. So we need to move in this instance. We need to move, what are we at right now? 30 points, right? Lower, which is 100% possible on SPY to trade 30 points in just a single day. But we need to do that in the next 7 days. So in that sense, if I were to take a position, I would prefer to take something like this as opposed to trying to take something like this. Does it have a higher probability of making money? Absolutely. Is the risk reward here pretty good? It's pretty damn good. It's actually, you know, it's 1-to-1. So it's pretty good. For an option buyer, maybe not as much. For an option seller, this is heaven. But I don't mind going maybe 5 to 10 points in the money just so I can make sure that whatever risk that I'm taking, just going 5 or 10 points in, if I really have a strong opinion, then I'm being paid for the risk that I'm taking. Now, if I lose money, this is the thing that a lot of people don't understand. If I'm losing money, I'm actually losing money on my safer trade. I'm losing a lot more money on my safer trade than I am on my riskier trade. So how much money am I losing here? $7,500, right? Now, if I go just 5, 10, 15 points in the money, yeah, I'm losing on the trade, but not $7,500. I'm losing $4,200. So how many trades do I need to win additionally after the fact in order for me to make my $4,200 back? Not too many. I just need to win the next trade, right? So that's it, guys. This went a lot longer than what I thought. I'm going to look at some of the questions here, but if y'all don't have anything else that you'd like to ask me, totally fine. We will be doing this quite often. I want to start building a community outside of the Discord group so you guys can get excited about trading the way that I'm always excited about this, because this is my life, guys. This is what I do. This is what I love doing. So let's see here. You do that for spreads. I do that for spreads, yes. So if you want to call them vertical spreads, defined risk trades, they're all the same thing. But yeah. Can you explain it again? It was too fast for me. So what part would you like me to explain? You want to be like me, then you need to have the same work ethic as me. You need to live, breathe, and beyond, you know, you need to do a lot of technical analysis, that's for sure. All right, so SPX, this is more of a, I would say, an advanced strategy. It just has to do with risk reward. I'm not gonna go over this too much, but just for me, when I'm looking to do an SPX trade, I'm normally looking to go just a little bit in the money, just a tiny bit, just so my risk reward profile makes more sense. So in my opinion, if I'm going to do just one contract on this trade, let's do something more reasonable. If we're doing just one contract on this trade, I would rather put up $200 to try to make $300 rather than going just 5 or 10 points out of the money, or in this case, not even that much. I would rather put up $200 to make $300 rather than put up, let's say, $225 to try to make $280. This is actually pretty good risk reward here already. But if we pull further back, then the risk reward starts to get watered down. So that's what I was talking about with this little SPX strategy. All right, guys, I'm gonna call it a night. I really, really appreciate you guys being part of this. No matter how small the audience is, for me, it doesn't matter. It's all about the quality of the education. And we will start talking about more analysis type stuff, but I can start going over trading concepts as well. I can't dive too deep into some of the very, very advanced and very complex stuff because I don't know some of the basis that you guys are coming from, but we can definitely start sharing analysis. Okay, guys? All right, I really appreciate it. Thank you, everyone. We will upload this video, and there's going to be a whole article base for you guys to come back to and maybe watch these videos in 1x, not 1x, but 1.25x, 1.5x, 2x, whatever. You know, so it's not exactly 45 minutes long for those of you that like to watch videos that way. But anyway, thank you guys so much. I appreciate it, and hopefully we'll see you guys in the next live session.